Hello, this is Pat Walker at Mission Winners doing a training coaching video for everybody. We all know that the markets have been rough. We could probably use other words, but we won't. Like this. Okay, pretty hard decline there on volume, some heavy volume in there on the spiders. All right, we don't argue with it. When the market starts to do this, what do? We just sell and wait. We really don't force anything. We'll lay low. We might do a small, if there's a setup on a stock, we might do something. But overall, we just kind of ride this and let it go. I don't know the future, and we don't forecast. Best thing we can do is just observe the action of the stocks. It's like the parable. If you want to learn about goldfish, don't read about goldfish. Watch goldfish. A lot can be learned simply by watching and taking notes. The trend is down. This is the yellow lines, the 8 period, the 20 period. So this is the spiders, okay? 20 period, this is the 200-day and the 50-day, all right? Walking down, all right? One thing I want to point out to you, though. It fell right here and hit a low. That's an easy low. A sixth grader could, maybe even a third grader could see it. Hit a low, and then it bounced. And then it pulled back to here, the spot right here, forming a potential higher low. And you can see it also. This is spiders. Here's QLD. It fell, it rallied, it fell, and it formed a higher low. This low is higher than this low. It's really simple. This is not, I'm not using Fibonacci or anything like that. We don't need to. Just simple, and no stochastics or oscillators. Don't need them. Don't need them. Bias can enter into that, and we don't want to do that. You just a simple high or low. So what do you look for? You look for it to take out some clean and simple tops and lift. All right? That's all you're looking for. Is it going to work every time? Nothing works every time. But more times than not, and there's our edge, this does work. And that comes from 30 years of study. I mean, really tearing it apart. So we look at this and we say, okay, I got a higher low. And it lifted off. You can see it. NVIDIA has a pretty good higher low. Look at this. QLD below the 20-day. NVIDIA moved above the 20-day and the 50-day. It's in a leading group. You see these 2 days of tops? I'm going to do something for you. Perceptual bias enters. This is a great investing lesson, all right? Perceptual bias enters into our thought processes if we only look at charts after the fact and say, oh, well, there's a cup and a handle. That's easy. Oh, there's a flat base. Oh, that's easy. Yeah, there we go. That's higher low. Oh, that's easy. No, you know what you need to do? You need to slide the chart back and look at it before it made a move. Study it. Study it. Really tear it apart. Like right here. Okay? Right in this area here. And what you can do is observe this and say, here's 2 days of tops. If it takes these tops out here, perhaps it will lead to a potential buy. A swing trade setup. Not a long base breakout, but a swing trade setup. Where you can make money. And again, it has a simple higher low. And it's a leading stock in a leading group. And it's got good numbers. And it's a max list stock. We've stacked the deck in our favor. So take a look at this. Now take it down to 30-minute. And here's the first 30-minute bar. Look at the volume. People talk with their mouths and vote with their pocketbooks. They voted here. They're voting. All right? This is a 30-minute chart. Take it down to 10 minutes. And that's the first bar of the day. Right there, going across these tops. Look at the volume. That's not mom and dad buying. That's serious coin. All right? That can be a catalyst. So what's the moral here? Look at the daily. And again, those are clean tops, folks. You can just say, hey, if 2 days of basically the same top pushing through the 50-day. If you've got something like that, all right, and it pushes, which it did, it gapped up, and then it pushed right through those tops. There's a spot there, and it ran quickly. It ran quickly. Look at the first 10-minute bar. As I stated, people talk with their mouths and vote with their pocketbooks. They're buying there. They're buying there. Here's the 30-minute. They're buying. And it's what we look for. I'm going to kill this limit alert here, this price alert. Bear with me so it's not going off while we're recording. Here's the spiders with a higher low. Perhaps it will take out the highs of this bar. That would be constructive. I'm going to get rid of that arrow. There's the volume. So I ask you, what's a slight negative on this? First off, the pattern is good. You do have a higher low. What's a slight negative on the spiders? Relatively low volume. You like when it's pushing and triggering, you would like volume coming into it. There's Amazon. Lifting off. Got to raise that alert. We're in this. We'll see what happens. Anyway, I wanted to share that with you. The moral of the story is you take a look at, and do it on the big indexes. Just do it on the S&P 500. You can do it on Qs or QLD. That's plenty. What about the Dow? The Dow is only 30 stocks, and it's price weighted with those 30 stocks. That's not a relevant picture of the market. Jeez, it's 30 stocks. Get a broader picture, a broader understanding and feel of what's going on. So I can look at spiders, I can look at QQQ, I can look at QLD. That will tell me a lot. And they do a lot of volume. You can't hide. They can't hide in there. There's volume in there. So these are the things that we look for. I encourage you to do the same thing. So let's watch this. Here's Amazon again. And again, perceptual bias. Take it back a day. This is the weekend. This is what we were looking at this weekend. And we say it rallied up. It pulled back. It's near the 50-day. See that? There's potential. 2 days of clean tops. Take it to the hourly right here and drag it over. And you've got this. Take it down to 30-minute. Here's the 30-minute. This is what you're looking at. Can it go across these tops with volume? And it gaps up. And check this out. This is a great lesson for everybody. This is the real world, okay? This isn't just hypothetical mumbo jumbo. It gaps up. It runs up. And then it falls and closes near the lows on volume. So what's going to be a trigger? Well, you've got to wait. You've got to see what it does. I'll play this out for you. First bar. Are you going to see this in any chart book saying, that's the bar you want to buy, that's the setup you're looking for, that's the slam dunk? Gee whiz. Gaps up, runs up, and closes near the lows on heavy volume. There was some selling pressure there. So you have to wait and play it out. And again, this is a 10-minute chart. I don't look at 5-minute charts. I never look at 5-minute charts. So, an inside bar. By the way, if you do, that's fine. I'm not criticizing. I have found there's too much emotion in the really short, the 5-minute, the lesser time frame. So we fine tune it for buys on 10, 30, and hourly. So now you have this bar, an inside bar. And we say, maybe if it starts to take this out, advance it one more bar. Look at this bar, taking this out. Look at the volume pickup. This is 10-minute. Then you take it to 30-minute. Look at how this thing's closed. Look at this. Look at this lift. So on 10-minute, it's lifting, all righty? Now what do? Taking out these tops right here. It's starting to run on a pickup in volume. You can buy. And then let it work and see where it goes. Where's it going to stop? A lot of people say, well, I look at it and it looks like it's going to stop up here. Possibly. Why would that make sense to you, by the way? See, I'm going to dig this deeper. This is what we do every day with VIPs. Why would this possibly pause here? Notice I said possibly. I'm not saying it will. But what would be a reason why? Well, look at this bar right here. See that bar right there? And you see this bar right here? I'll put the line right there. Basically, dang near the same price. Do you think there were people that bought this down here and watched it go all the way up to here and didn't sell and watched it frickin' go all the way down to here? And go, good Lord. And then it rallies back up. There were people, it rallied. That means there's people buying. Do you think there were people that bought it here and watch this go to here and then drop to here. You can say, well, that's no big deal. Hey, folks, that's dang near 100 points. 100 points. 100 points is 100 points. I don't care if it's a $2,000 stock or a $400 stock. It's 100 points. You think there were people that said, hey, by Jove, if I get back up near my price, I'm selling. So where may be a spot that this might pause? That high and that high. Charts, remember this. This is very important. Charts are simply a reflection of investor emotions. Fear, greed, panic, complacency. When you understand this, you'll have a better understanding of how to approach charts and price bars as they hit various spots. Charts have memory. You can say, no, Patrick, a chart is an inanimate object. No, I beg to differ. The chart is a reflection of buyer emotions. And there is memory in emotions. Yeah, I have a degree in psychology too. Big deal. It's common sense if you think it through. And that's awesome. That's power for you. That's what we look at. And this is what we share with the VIPs. Things to look for. Things to look for to help us capitalize on it. Would it be nice if Amazon, which we own down here, takes out these highs? Sure. Will it? I don't know the future, do you? But it would be nice. Could it possibly pause there because there were people that got stung here and there? Sure. And guess what? We'll be ready for it. We'll anticipate, see how it goes, and play it out. Maybe it will keep lifting. Don't know. But price and volume will tell us. Anyway, I wanted to share this with you. Just a great study on how to do this. NVIDIA right there, QLD gap, and it's running with a blatant higher low. Look at that higher low. That's what we want to see. Last point. I want you to look at spiders. This is a great lesson. Where are the spiders in relation to the purple line, which is the 200-day? Well, Pat, it's below the line. You get the gold star. I agree. What's the 200-day doing? Well, Pat, the 200-day is falling. You get 2 gold stars. All right? There's the spiders. Here, that's the S&P 500. Here's QLD, the NASDAQ 100. How's that doing? Falling very little, and watch. Pretty far away from the 200-day. Closer to the 200-day. Now we know where the strength is. I just wanted to share that with you on how to do this. How to do this. It's not hypothetical. It's the real world. We have a higher low. We'll see what happens. I don't know the future. Nobody does. All we do is we get in line with what is. I had a quote taped to my monitor for over 20 years. I'll believe in what I see and not in what I believe. That helped keep me in line. It helped keep me in line with the markets, and it kept me safe. Just observe. You can learn a lot by observing. And I hope that helps you, and I thank you.